What's up, everybody? Welcome back to the Dollars and Dumbbells podcast. I'm your host, Justin Green, certified financial planner. Today, I've got a really fun episode for you. We're going to talk about financial metrics, the three financial metrics that I think every business owner should check weekly. If you're a business owner, you need to know where your money is going each and every month. I hear all the time from business owners, I'm making a lot of money. I just don't really know where it's going. I can't figure it out. So that's why tracking and mapping out your cash flow is super important. So I put together a free training in less than 20 minutes. You can watch this video and map out your cash flow and have a better understanding of where it's going and where you want it to go. If you want to get access to that free training, go over to assistfp.com/cash-flow-training, or just go to the show notes and you can grab the link and download it right there. Let's hit the disclaimers real quick and then dive straight into the three financial metrics that I think every business owner should be tracking weekly. Justin Green is the founder of AssistFP, a financial planning firm, and Be a Wealthy Coach LLC, an outsourced CFO service. All opinions expressed in this episode are mine solely and not reflective of AssistFP or Be a Wealthy Coach. As always, this podcast is not advice and it is for educational and entertainment purposes only. Always consult with your own financial, tax, and or legal advisor before making any decisions. All right, so everyone knows that you should be tracking metrics, but you might not know what metrics are the most important for you to actually be tracking in your business. So I wanted to start off by introducing you to three metrics that I think are super important to not only track on a monthly basis, an annual basis, but honestly on a weekly basis. I think day to day is just too frequent. There's too many variables, too many ups and downs, and you would just be overwhelming yourself. But I think 52 checkpoints in a year is actually very important for these three metrics. So the very first one to kick it off is revenue. If you've been listening to me, you might be like, wow, I can't believe it's profit. I'm going to explain that in number two, but revenue is at the very top line, right? So everything does start with revenue. So I think it's super important to track this one each and every single week. So revenue is, in the simplest terms, the total of all sales. So if you have multiple products, multiple services, etc., what's the total of all of those sales in that week? Now, for me, I like to look at, say, your Stripe or your PayPal. If you have multiple payment processors, you may just need to add up multiple different figures to kind of get that total revenue number. Or if you're using a bookkeeping software such as QuickBooks, Xero, Wave, or if you're doing this in a spreadsheet, then you can just tally that up. You can get that number pretty easily from QuickBooks as long as you're categorizing your transactions on a weekly basis. And ideally, you'll probably have a annual revenue target or goal that you're working towards. So if you take that revenue target and you break it down into monthly targets, you can then each week track your progress towards that monthly target. For example, if you've got $1 million, let's make this easy. If you've got a $1.2 million annual revenue target, that's going to be $100,000 a month for 12 months. So if you're going in weekly and you're tracking your revenue each week, if you do 15,000 in the first week and then 17,000 in the second week, well, then that's only 32,000 out of 100,000. You should be at 50,000 to be on pace for that month, and you're only at about 32% compared to 50%. You know that something needs to be done in order to catch up on that month. If you want more information on how to set those targets and goals, let me know and I'll do a future episode on that. But you should have a target, you should have a goal of what you're trying to achieve that year, break it down into monthly, and then you can follow weekly to see if you're on pace. And the reason I want to take a look weekly is because if you're only tracking on a monthly basis, well, that's only 12 pivot points you have to kind of course correct if something's going wrong. Whereas if you're looking at this on a week to week basis, you may not need to pivot each and every week. You may not even need to pivot on a bad week, but you have more insight to know, like, oh, we've had 1, 2, 3 bad weeks in a row. Something's wrong. Something's broken. We need to fix that. And so you would have 52 pivot points during the year where you get to take a look at the data and figure out what insights are most important from this data, from this revenue data, and make a decision on if you need to make a change in your business. So that's why I think it's important, because if you're on a monthly basis, then you only have 12 pivot points. By the time you get to the end of the month and you realize, oh, we're way behind, it might be too late because you're also probably already a week into the next month before you get that data, and you've fallen behind, and it's a lot harder to pivot and just kind of catch these insights as early as possible. And when you hear that, you might say, well, then why not track this daily? There's too much fluctuation in online business and business in general for daily metrics. So things are just going to be up and down. And so you don't want to have to make a decision on 365 data points. 52 is a really good number to kind of consolidate and give you more of a trend oversight rather than just the daily fluctuation. So it would just be overwhelming. It would cause a lot of stress if you were following the numbers that closely, and that's just not what we want for these metrics. All right, the second metric is expenses. You can usually find this in your QuickBooks, or you could go to your bank account and your credit card platforms. Now, if you have a couple different bank accounts or a credit card, even if you just have one bank account and one credit card, this might be easier to just aggregate it, combine the totals in QuickBooks. Once again, you have to be categorizing this on a weekly basis. But if you're doing that, when you go to check these numbers, you categorize in QuickBooks. Should only take you a few minutes if you do it on a weekly basis. And you can then just pull the expenses right out of there, and you're just looking at total expenses. You don't need to break this down into categories like you might do on your P&L and etc. Just the total number. We're looking at top line. We don't want to get too granular here. You're just trying to get a pulse of what's going on in the business. And like I said earlier, you might be wondering why profit wasn't number one. Well, that's because we had to get the revenue number and then we had to get the expenses number to figure out what the profit is. So if you're new around here, I love profit. Profit is the most important metric. It is more important than revenue. However, you need revenue and expenses to get to your profit. So that's why those are the two metrics that we're actually going to track, and profit is a result of those. All right, so you might be thinking number three is profit. It is not. I kind of lump profit into the first two. Realistically, you can just do a quick revenue minus expenses and figure out what your profit is on a week to week basis. But the third one that I think is most important is what is your new recurring revenue? So each week when you're signing up clients, how much of that is going to be new recurring revenue? And I think this is just super important to build a sustainable business, is to have as much recurring revenue as possible. Doesn't need to be 100%, but you should have at least one service, one product that is recurring revenue. So that way you're not starting from zero every single week, every single month, and always having to chase sales. Now, the hard part is this one could be a little bit trickier to track. You might have to go into Stripe and pull a subscription report and see, who's on a subscription. You might have to go into Kajabi and see, like, okay, who signed up and is it recurring? Whatever you're using to sign them up for this ongoing service, you may just have to figure it out and kind of dig a little bit. But once you have that process figured out, you can document it, and then you can just do this very quickly each week. I've had clients who just have an ongoing Google sheet with their client list. So every time they add a new ongoing client, they just add them in throughout the week. So if you add 3, 5, 10, 15 clients that week, you just add them in. And at the end of the week, when you're tracking your metrics, you can just go and add up those 15 clients easily in a Google sheet. You just highlight the amounts. If you have the client listed, when they signed up, and how much they're paying each month, you can just highlight it and see, okay, I've added $2,000 of recurring revenue. It's a super important task. It may be a little bit more manual to figure out, but it's really important, and you want to kind of be on top of this and just be able to anticipate future cash flow. So figure out what works for you. Track this each week because recurring revenue, it's awesome. And I highly recommend building up as much of it into your business as possible. So, all right, those are the three financial metrics I think every business owner should absolutely be tracking on a week to week basis. You might not need to make a decision on a week to week just based on, if you're behind or on track or whatnot, but you should be taking a look at these each week and just kind of figuring out, okay, where do I stand in terms of my monthly targets, my annual targets, etc. There's a lot of financial metrics that you could be tracking, so prioritize these three, but there might be some other ones that you also want to track. I recommend probably not more than 5, but then there's also non-financial metrics you're probably tracking, such as new clients, new discovery calls booked, new courses purchased, etc. And so I would just take a look at each department in your business and figure out, what are 3 to 5 metrics that you could be tracking and put it all into like one scorecard. If you think it would be helpful to have some type of template for a scorecard, let me know. Shoot me an email, justin@assistfp.com, or, go over to Instagram or LinkedIn and shoot me a DM. You can find me on Instagram @JustinGreenFP or just Justin Green over on LinkedIn. The show notes will have all these links, but shoot me a message. Let me know if I get enough interest on a scorecard. I'll put together a template for you, so that way you have something you can just open up in Google Sheets and just track this manually. And the reason, really important, the reason that I think you should manually do this is I love automation. I love automating as many financial tasks as possible. I often have clients who will automate their investments, their savings, etc., because I want to make sure that money is actually getting moved and that you're not having to manually go in and do this, because you might delay, and then the money ultimately doesn't get moved. However, when it comes to your business, I think it's super important to know your numbers. And what I found is if you automate the metrics and you automate the data too much, then you just don't know the numbers, because it's there, but you don't actually look into it. You don't have the insights. You don't have the clarity around the data that you're going to need to make really important decisions in your business. So you can automate it in QuickBooks and stuff like that, but I think it's really important to then go into QuickBooks, pull the numbers out on a very high level, pull the numbers out, and have a scorecard where you can take a look and see, okay, are we on track? Are we behind? And this is where you're going to get a lot of clarity on your business, and it's going to help you make business decisions moving forward and just kind of have a less stressful approach to managing those numbers in your business. All right, that's all I got for you today. In the meantime, stay wealthy, my friends, and I'll catch you on the next episode. If you're enjoying the Dollars and Dumbbells podcast, please head over to your podcast app and leave a rating and a review. It's super helpful to get new listeners to hear the message that we are preaching. Also, please feel free to share the episode on your Instagram story. Tag me @JustinGreenFP and let me know. I love to see who's listening and who's tuning in.